Good afternoon, traders. This is Michael from the room with Paul today, and we're going to do a quick educational video on how we use the GammaEdge charts and the bot in the room, and how we approach the market in the morning and look for gamma levels and overlay it with a little bit of a technical analysis, and how we make these charts actionable for new traders or for the members coming in. So go ahead, Paul. This is the Discord, our Discord GammaEdge. Obviously, these are auto-populated at 2:14 in the morning. So this gives you some charts when you wake up in the morning, if you're having your morning coffee or want to get ready for the market, and you can overglance or just take a quick glance at these. So go ahead and give me some commentary about how you would use these in the mornings.
Sure. So what Michael's described is done while we're all sleeping, if you're in the Eastern time zone or in the United States. And basically the charts that you have in front of you show the overall gamma condition for whatever you're looking at. In this case, we're looking at the SPY. And one of the first things that I do when I'm sipping my morning coffee is just to look at the presence of that red line and the green line. And when the red line's bigger than the green line, that means we're in a negative gamma condition. And that can be a fairly significant series of events for us, meaning the dealers are predisposed at that time, most likely to sell any type of dip, which means we actually have an increase in volatility overall. So that's one of the key things I'm looking at. So you have this gamma condition, then we have it overlaid with price series, and those red and green lines that you see are the overall gamma levels, which can form support or resistance depending on where they are. And we do that for both a daily chart as well as a minute chart.
Great. And the levels are auto-populated too for us here on down, so you can place those on your chart very quickly. So we're going to go ahead and go to the actual dashboard that I think is an excellent tool for new traders and members to look at.
Right. So one of the first things, once I get done with the Discord bots and the charts there, is we populate these charts by about 8:30, 9 o'clock in the morning. We have to wait for the Options Clearing Corporation to update the overnight open interest. And when they do that, they give us a preview of what's going to happen before the open. So this chart basically shows the overall gamma condition for the SPY, as you can see. And one of the key things I look at is what I just described, is up in the upper right-hand corner where we've got that negative gamma condition. And again, that means there's a chance that we're going to have increased volatility today. The next thing I look at is that negative, or that net GEX right there where it says -2 million. That's a big number for the SPY. And what that's basically telling us is that there's a lot of negative gamma that the dealers are having to deal with, that they're exposed to. And then above that, we've got the expected move. And this is on either side of the price being 464.53 when this was evaluated. And this is suggesting to us that we could have a pretty volatile day either way. It doesn't mean we're going to end at 2.2% plus or minus, but it means intraday we may see some moves just because we're in a negative gamma condition and just because of the overall condition of the market.
Yeah, great. One quick thing we'll note over here, these black boxes, this gives you a quick glance of which expiry you're looking at. So obviously all the expiries are checked all the way through 2024. So that's something to note quickly if you're just glancing at the charts.
Absolutely. In fact, that's a real key. Thanks for bringing that up, Michael. That's a real key here, because we use those tiles to select and deselect different expirations, and you'll see that here coming up in a few minutes. So you should always pay attention to what's selected and what is not selected.
Definitely agree. The next chart is net GEX by expiration, kind of a little pie chart that shows us the percent expiry.
Yeah, the key thing to take away is that as different expirations roll through, the impact on the options complex is pretty significant. And you can see for the 14th, which is 16%, relative to everything else that you see here, it's the second largest number, right? Down there next Friday, the 21st, we also have 22%. So these two expirations, the monthly, which is on the 21st, and the weekly, which is shown here on the 14th, those two together are 38% of the SPX or SPY complex, which is a fairly significant amount, which means we could see some volatility plus or minus into the overall market.
Agreed. All right, we'll move on to the next chart. This is another Gamma Dash chart, and then we can see that the 114 expiry is excluded here.
Yeah, one part of our analysis here is to take a look at, and we call it skating to the puck. Where are we ending the day? And so when we deselect that tile, which the one that is shown white there, what that means is that we are now at 4:01 in the afternoon Eastern time. And this is basically a reflection of the overall structure where we are at the end of the day. Why that's important, when you compare this picture to the previous pictures, you get a sense of what the change of the day is going to be. And it's especially important now because this was a 3-day weekend. And so early in the morning, we started forming some thesis of what we could see during the day, and a couple key things that would help us understand where would we end the day. And the first thing is, you can see that yellow line that's across there. That is where the current spot price of 464.53 was evaluated. Just above that, you see that back and forth of the gamma in the red and the green there. And that little chop that you see there, that chop pattern, tells us there's not a lot of pressure there. There's a lot of back, forth. And that's fairly important because the dealers want to go into the weekend both delta hedged, which means they're flat, no directional risk. And then they also, if the price changes $1 or 1% or whatever your metric is, their exposure doesn't really change that much. It's linear effectively. So it's not a big deal to them. Whereas if you're down in the red area, or if you're up in that green area up above and you close at 4 o'clock on Friday, you're not going into the weekend flat. You have directional risk. And there are things there that would make a 3-day weekend pretty risky for them. So one of the theses that we came up with very early in the morning was that the dealers would want to go back to this area just because it represented the lowest risk area for them to go into the weekend. And so we use this chart where we take away an expiration and we see where things are at.
Yeah, great analysis there. That was about perfect, and kind of what you laid out in the SPX channel, also with the SPX levels. We were looking at that transition zone and how the price would possibly move back to that area. So,
right.
The next one is 114 only expiry. So this is going into the current day, 0 DTE or 1 DTE, depending, or 2 DTE, depending on which tile we're using. So.
Correct. Yeah. So this is a real important analysis that we do in the morning, because on a 0 DTE day like this was, it tells us really what is the gamma distribution, what are the dealers exposed to for the overall day, and what's expiring. That yellow line is the current price. And so when it drops, the red net gamma that's above it, that's in the money. And so those people, as the yellow line drops, those people are unprofitable, and they're going to want to do something with those puts, ostensibly puts. And then on the top side, if that yellow line moves through that green zone, as it moves up, everybody below that green line or that yellow line that is in the green is our calls that are in the money. And again, those folks are going to want to do something. And so this has a huge influence on how the day progresses and where that yellow line is relative to the gamma condition or gamma state. So one of the key things that you guys should be looking for is, where is that crossing point? And we can see it's at 466, 467. That's kind of a balance point or area of neutrality. So think of it as a pinning point, or maybe a really good spot where the dealers would end up. But also take a look down at 460 and 470, real key areas here, because 460 is where most of the gamma is expiring for the day, and 470 is where most of the gamma on the positive side is expiring for the day. This sets up the trading range for the day. Now, I know we said 2.2 in the expected move, but this tells a story that if we get above those ranges, things are going to probably get volatile. If we stay between the 460 and the 470, then there could be some natural migration towards some of these low risk points that we're talking about.
Yeah, that's great analysis and how we look at that going into the day. And the next is SPY levels that are auto-populated or that are posted. And these are basically just zooming in from the chart, obviously removing some of the color coding, and then just zooming into the most important levels that we're looking at.
Yeah, correct. And we've already talked about the 2.2 expected move and where you are. I will say LG means large gamma, and it's ranked. So minus, so where you see gex minus, and then -2, -3, -4, and then +2, +2, +3, +4, etc., are either positive gamma, think of the green bars, or negative gamma, think of the red bars. And these are just the key levels that we're looking at for the day.
Yeah. Excellent. And our chart before we go to technical analysis. So this is the delta contract to 0. I didn't pull the gamma contracts, but it was around 468.50. But these are the delta contracts to 0, and they were matching the 460 gamma level. So that was kind of important heading into the day.
Right. Yeah. My only commentary. So there are usually two of these charts. One of them is as you see, the delta. The other one is a gamma. And we think these are very, very key levels. The delta contracts to 0 tells us where we think, this is a theory that we have, that this is where the dealers, as on average, have no more inventory, and they're selling short if we drop below that level. So if we were to have dropped below that 460.60, we think things could have accelerated down pretty fast if we started dropping rapidly below that. So it becomes a fast moving downward plunge. The flip side, again, if we can stay above that area, the confluence area up to 470, we thought that was a pretty good place to be. And as Michael just said, there's another chart that's called the gamma contracts to 0. That was up at 468 or so. And that's a key level too. So we felt we were probably safe between that 470 and that 460 level, as you see here.
Yep, perfect analysis there. Okay, so we'll move on to some technical analysis and kind of how we're overlaying the gamma levels. This is a simple price chart, obviously, with just a few things added. To the left, we have volume by price. This is kind of works as sort of kind of like market profile. But the key levels I want to show is that we've laid out the gamma levels intraday on these 5-minute charts. So if you're looking to trade intraday, scalp, or go from an entry to a swing, these become exactly key levels that we've already laid out with the dashboard. As we move into this 460 level, obviously we're anticipating something to happen. It doesn't necessarily have to happen, but this is where we want to be ready to execute with risk management. Any commentary on that, Paul?
No, I think we've highlighted in the other discussion. I won't belabor it, but that 460 and that 470 level, that minus gex and that plus gex level, were really the ranges that we were looking at. That large gamma -4 there was another key level. Michael talked a little bit about how we viewed the day and how it unfolded, but the key thing to take away here is that once we saw that 460 level was holding tight, and this also correlated over in the futures, some work that we had done there on the ES as well as the SPX, we had a pretty good idea that we were in good shape and we should shift our gears to going long. Mike, I'll turn it back over to you and you can talk about how we got there.
Yeah, so when I'm going into the morning, or obviously when we're discussing in the voice chat kind of what we're looking at going in the morning, I think it's important to recognize some other price technical levels that we also use. One would be the previous day close. So this would be here where you kind of see this gap. It's always an important level. I think the previous day high, previous day close is very important to watch for sentiment and buyer versus seller action. So we get an opening range. This is pretty well known that the first 30 minutes market makers and hedge funds are pairing up the imbalances that are coming off and deciding kind of how the price action is going to move for the day. And as you can see, we just kind of moved right into that previous day close supply level, which also, was a confluence of the LG -4 level. So then we got a reaction around there. I mean, obviously these are not absolute levels, so we don't have to reach it and then see a perfect reaction or wick off of it. These are just areas of interest that we watch, and that's what happened. We got a reaction and then a decent sell bar. If we were overlaying the ticks, which we'll go into in another video, it was a pretty decent sell, and the ticks were continuing down. And then we're in a negative gamma environment, so they overlay that. Obviously, the dealers are going to sell into weakness. Then once we broke that VWAP level, it was just continued selling. And then we never really recovered view out for the rest of the day. We continued to make lower lows. And then we're coming into that anticipated pre-market level of 460, where we're either going to see a reaction where the puts are closed and the people that are holding those puts are in the money and they're going to capitalize on those profits. And then the dealers will have to buy, moving back up away from that level with the overlay of the negative gamma environment. Or we would see a complete liquidity break. And basically you'd see a kind of engulfing, and then there would be stops below here, and then price would rapidly get pushed down below that 460. The other reaction that can come into play would be a break below, and then the stops are taken out, the puts are capitalized on for the profits, and then you'll see a reclaim, a reaction, and then the dealers would still have to continue to buy. One thing I will note is that 460.60 was our gamma flip level, and this is basically where we tested it multiple times. We undercut it and then reclaimed, and then we had a kind of bullish engulfing here and then continued higher. So that 460.60 was an extremely important level, along with the 460. Obviously, that was the large gamma where we anticipated the reaction. But then once we got back above that gamma flip level, the dealers were on the other side and had to continue buying into the close. And this is what we saw. So this is where we would want to be ready to execute our trade. Obviously, we would close puts if we're short, as Paul had already said he did. And then we'd anticipate going long with calls or leverage ETFs. And then we'd manage our risk basically just under these lows. And you can see on a technical analysis kind of standpoint, we recovered this, demand supply, crossover. And then that's definitely where you could enter the trade versus the slow. And you have a very tight risk management area. And I think that's key for us on this, using the GammaEdge and the technical analysis confluence, is we want the lowest risk possible entries. And we're not always going to get it exactly, but we have to be patient when we move into these areas. And these areas act as magnets, right? So in here, there's not really an edge, but when we reach a level and we get a reaction, there's definitely an edge for us to be able to capitalize on. Any other comment on that, Paul?
No, I just want to highlight what you just said. The fact that we walked into 460, you can see that we tested it several times, had a couple tails or wicks there where it pushed before, but it never closed appreciably below it. That was a tell. That was a key tell for us that we were holding it, and those are 5-minute bars. So you can see we held it actually for some time, and then we pushed up, and then that, as you said, we basically we had to take the opposite side of the trade, whereas we had been bearish before. Now we have to become bullish, and you can see it worked right out, and we pushed right back up to the area that we thought would represent the lowest risk for the 3-day weekend. It doesn't always work out that way. We've seen this before. We've seen extended weekends, or we've seen the weekend setups push us to where we go into a flip area or a neutral area, and we can expand upon that on a later video.
Yeah, and one thing I do want to point out into the morning is, if we would not have saw this rejection reaction and we had recaptured this LG -4, then the path of least resistance obviously would be up, towards this GEX plus, and the dealers would have to make a decision and react at that point. And they may have been offsides. That's just kind of a thesis, but they may not also. But once you reclaim or capture a level, a decent gamma level, then it forces, on the psychology side and on the mechanical side, it forces the dealers to react. So I think that's the other part of the GammaEdge, that we know they have to mechanically do something to stay hedged. And I think that's one thing that we can capitalize on kind of moving forward, and what we'll look to kind of exploit for our trades.
Very good.
Yeah. Okay, great. Hopefully this helps you kind of understand how we go into the day, looking at the Gamma dashboard and the bot that is auto-populated in the GammaEdge Discord. We'll continue with these videos. We're going to go ahead and put this one out. Nothing really special or fancy about this. It's just kind of getting this information out. We'll get some feedback, and we'll see how the structure works, and then we'll continue to improve on these and see if we can educate the rest of the GammaEdge members and kind of how to use this information. So, okay, great. Thank you. Thank you, Paul.
Yep. Thanks, everyone.